See, Mr. Ranade provides the following particulars of assets transferred by him during the previous year ended 31st March 2020. So 1920 is the sale year. You are required to compute his income from capital gains chargeable to tax for assessment year 2020-21. Okay. And for the details are given for that calculation. Details are given in the next slide. Residential house he is selling, which will come under land and building category. So land and building means you have to remember that if period of holding is more than 24 months, it will become long term. Okay. Which was purchased in 11th November 2001. So year of purchase is 2001 2. Okay. For 14,54,000 and sold on 16th January 2020. So year of sale will be 1920 for 1 crore 46,50,000. Other expenses incurred is 50,000. We have to first calculate the capital gain of Mr. Ranade. Okay, SSC is Mr. Ranade. So how we will calculate? So always before capital gain, we will have to, before solving capital gain or calculating capital gain or computing capital gain, we will have to first analyze whether the asset is a long-term capital asset or a short-term capital asset. So we'll begin our solution. Name of the SSC. Name of the SSC is Mr. Ranade. Previous year. Previous year is 2019-20. So previous year is 1920. What will be the assessment year? If previous year is 1920, assessment year will be 2020-21. Correct. Yeah. Now, date of purchase. Okay, what is the capital asset that we will note? Capital asset is the residential property, which is under land and building. Residential property is sold by Mr. Ranade. Residential property will come under category of land and building. Okay. Now next, date of purchase, or directly we can do it as year of purchase and year of sale. What is the year of purchase? It is 2001 to, and year of sale is 1920. So nature of capital gain will be long term or short term. Nature of capital gain. Nature of capital gain will be long term or short term. Yes, very correct. It is long term only because period of holding will be obviously more than 24 months. It is approximately, you can say, 18 years difference is there from purchase year and sale year. So it will be long term. The reason you can return period of holding is more than 24 months. Okay. Okay, 24 months means 2 years approximately. You can take 24 months as 2 years, and but here in this case it is around 18 years. So it will be obviously long-term capital gain. So now we have done the basic understanding. Now, if it is a long-term capital gain, we will know that indexation benefit will be available to the SSC. It is a long-term capital gain. Okay. Now we'll do the computation of capital gain. Computation of, I can write it down more specifically. Now we have understood it is a long-term capital. Computation of long-term capital gain. Format we will take same. Everybody make the format, then we will start solving. Serial number, particulars, amount. Long-term capital gain. Okay, so what is the sale consideration? Rupees 1 crore 46 lakh 50,000 is the sale consideration. What is the sale consideration? Given in the question, 1 crore 46 lakh 50,000. Okay, now indexed cost we will have to calculate because it is a long-term capital gain. So for calculating indexed cost, we will have to use the cost inflation index. Year of purchase and year of sale, both years inflation index is given, see 100 and 289. Means in 2001 to if you could purchase an item for 100 rupees, same item will cost 289. So what will be 14,54,000 in 2019-20? That is the meaning of indexed cost. So how we will calculate? We will use the cross multiplication method. Okay. You can apply formula also, but cross multiplication method will be easy to understand. So 2001 to and 2019-20. So 1 2 is the first year, you can say, because base is 100. And here it is 289 in 1920. So 14 lakh 54,000. So if 100 is becoming 280, what will 14 lakh 54,000 become? That we can calculate. Take here x, do cross multiplication, and tell what will be the indexed cost in index cost of acquisition in year 1920. It will be how much? 42 lakh 2060. indexed cost will be 42 lakh 60 42 lakh 2060. Okay. Okay. So this is the index cost. Now you can understand the difference. In 2001, you have purchased the house for 14 lakh 54,000. The same house today's cost will be 42 lakh 2060 based on cost inflation index. Okay, and other related expenses are given. Transfer expenses that we will have to reduce. For transfer expense, there will be no indexation benefit, etc. Transfer expense is how much? 50,000. Is what will be the capital gain calculate? Consideration minus indexed cost minus transfer expense. This will give you the long-term capital gain. How much it will be? How much? 1 crore 46 lakh 50,000 minus 42 lakh 2060 minus 50,000. So it will be rupees 41 lakh 52,060. This will be the long-term capital gain. On this, you will have to pay 20% tax and 4% education and higher education cess on the tax amount. So this is the capital gain working. See, now by taking indexed cost, your capital gain is 41 lakh. So if indexed and benefit was not available, and imagine only 14 lakh reduction was given, so this amount would have become more. So that's why indexation benefit is given for long-term capital gain. Okay. So I'm assuming everybody have noted down this. So capital gain is 1 crore 3 lakh 97,940. Okay. So now on this 20% tax will be applicable and 4% education and higher education cess will be applicable. Education and higher education cess will be applicable. So imagine see on 1 crore 3 lakh 97,940, 20% tax you have to pay. Very huge amount it will be. Now, the income tax act says that if you do invest this amount in some investment or in other house, then you need not pay tax on this amount. Okay. So this capital gain we have calculated. Okay. Now there are various benefits given to the SSC. So in which SSC can make investment of this amount in various different places. Okay, now see 1 crore 3 lakh 97,000 on this. If 20% tax is calculated, it will be a very huge amount. Okay, so for that purpose, what government says, Income Tax Act gives various benefits to the SSC. That if they are making investment of this amount in some different places, then they can get benefit. So two important investment you understand. One is that if the SSC is making investment in new house, he can get the benefit of tax exemption, tax benefit he will get. Suppose Mr. Ranade is using this 1 crore 3,97,940 for purchasing a new house, then he need not pay tax on this amount. Okay. And another exemption, there are various exemptions. We are discussing two important exemptions. One is the investment in some bonds. Investment in some bonds. If SSC is making some investment in bonds issued by Government of India, like NHAI or REC, these are all bonds issued by government authorities, National Highway Authorities, Rural Electrification Corporation. So if investment is made in these bonds, then also tax benefit will be available to the SSC. Okay. So popular benefit is if you will invest in new house, entire consideration, this consideration, then capital gain will be exempt. You need not pay tax on this capital gain. Another is the investing in the various securities, that is bonds issued by Government of India authorities. Okay, yes, correct. 1 crore 3,97,940, 20% is 27,79,088 is the tax amount. If you want to pay, avoid paying this much amount as a tax, then what you can do, you can use this amount which you have received for investing in some other house property. So you can purchase the new house, okay, and avoid paying tax. Okay, this is a benefit given in income tax reform. That if you will use the consideration for investing in new house property, okay, then you will get the benefit of tax, capital gain tax, or you can invest in some bonds issued by various authorities. So if you will read this question, see, second part is given, see. Mr. Ranade made the following investments, see, out of the capital gain arising sale of his residential property, he purchased 3-year bonds issued by REC, Rural Electrification Corporation, 10 lakh rupees he has invested. Okay. So 10 lakh rupees he has invested in this rural electrification bonds. So you can give him the benefit of 10 lakh rupees. Yes. Investment. So net capital gain will be, net long-term capital gain will be, so this benefit we will get. So net capital gain will be how much? 1 crore 3,97,940 minus 10 lakhs. From the section before see not remembering the section, for example. So anybody calculate this minus this will be revised to capital. It should be how much? This I think it should be 93,97,940. Okay, so this will be the revised amount. Now here, actually, Mr. Ranade could have invested up to 50 lakhs. So Act says that you can invest up to 50 lakhs. So if you would have invested up to 50 lakhs, more benefit he would have got. But he is investing only 10 lakhs. Maximum amount he can invest in this bonds is up to 50 lakhs. So he could have taken that benefit and invested more 40 lakhs. So his capital gain would have been reduced more. So this is the advantage of making investment in specified securities. Okay, so for today we are stopping here. We have completed this illustration on capital gain, also understood the deduction available in capital gains. Further, we will continue in the next class.